Hello, ladies and gentlemen. Today I am going to show you how my portfolio has been performing year to date so far. Now, I'm actually recording this just a little bit before the halfway point of the year, but I'm going to be on vacation while I am hitting that time frame. So I just want to go ahead and show you guys now where we're currently sitting at. So I'm currently in my portfolio and we are sitting at this recording at $328,276. I'll show you the companies I'm invested in, which ones are performing well, maybe which ones are not performing so well as a whole, and kind of just talk about a little bit of what's going on with the portfolio. I added a new holding into this portfolio, as well as a dividend from a company that just paid out their very first dividend, which is really exciting to have received. So let's go ahead and kind of move through this a little bit. If you are not familiar, this is M1 Finance. This is where I hold my investments for my taxable account. They also do retirement accounts and custodial accounts as well too. If you want to check them out, the link will always be in the show notes down below for you, as well as any other resources that I like to use. And that also includes my dividend income tracker, which is right over here. So all that is going to be in the show notes if you want to check it out. So like I mentioned, 328,000, I believe that's the highest I have on recording, although the portfolio at one point, let me try to get this out of the way, did hit about 330,000 right over here on June 12th, which was a really nice sight to see. Obviously, that's me investing my money as well as the market going up. So if we kind of look down here, you can see, so starting on January 1st, 2024, we had a total of $247,975. And like I mentioned, right now on June 19th, just a slightly early before the end of the first 6 months, we're sitting at $328,270. Now we did put a decent amount in over the last 6 months. It's been great. It's about what we did last year as well too, and I believe close to what we did the year before as well too. So we're investing whether the market is going up or whether the market is going down. I'm not trying to time the market. I'm trying to get my money into the investments that I see as most valuable. As in this portfolio, I don't have any ETFs, although I do recommend it if you're somebody who's just getting started. ETFs are a great way to go. I have it for my retirement, so I don't have to think too much about it. You can see total for this year, we're sitting at $1,210 so far earned in our dividends. And again, I'll show you the company that just paid me out their first dividend, because before that they weren't, and now they are paying out dividends, and it's a sweet, sweet thing. And you can see here our market gain for the year to date has been 32,831. So we have a really, really nice upswing. You can see here just on this overall chart. Right now with the money weighted return, that's 11.41% on the return on our money there, which has been really nice to see. Now we can go ahead and kind of break this down between the different sections we have. Now these are just sections that I've created for myself. You can see we have a growth fund, we have finances, tech, retail, and travel. So these are just ones I chose to name and put certain companies into these funds right here. So first I want to show you the newest company that we added to this portfolio. I talked a little bit about it somewhat recently in a previous video, and that is going to be with Booking Holdings. So this one, you can see we're already up about 5.68%, about $121. So if we go in here, we have a little over 0.68 shares for this. Obviously, you can see the price per share has a pretty large number. It's almost $4,000 per share. But that's one of the really nice things about M1 Finance and a lot of these brokerages. You could do fractional shares. So I'm not worried about the price amount for the actual company, so long as like the PE ratio and all the other numbers we're looking at really make sense for what we are trying to accomplish, which is investing in companies that have good value and have good growth opportunities. So that's going to be right there for us. We did actually earn a dividend from them. This isn't the company that just started paying out a dividend, although they did 2 dividends ago. I just happen to have just gotten into it as well, but I'll show you which company I was talking about a little bit later. So that's $3.94 that will be reinvested in the rest of the portfolio. I think it hasn't officially paid into the portfolio. It has just gotten past the ex-dividend date. So you can see here with Airbnb, I think we're still, making sure we're on the year-to-date toggle here. So this one, right now we have 129 shares. And you can see right over here, where are we at? Right over here, where total market gain for the year is $1,122 so far. So right now I'm actually buying a little bit more into Airbnb at this current time, with it it having gone down over the last couple of weeks. I just see some good opportunities for the long term with this company. They're doing really well overall, and their quarters are looking great, and I enjoy investing into this company as well as using them as a service as well as being a host on Airbnb. Now, if we go back here one more time, oops, let me go all the way to the front here. So we also got our retail right over here. And now for our retail, making sure we are toggled on year to date here, you're going to see a pretty large drop right over here. But no worries. Sometimes that's just going to be with either the companies dropping. Sometimes I pull some money out from some companies, and that might happen there from time to time. So we got Home Depot right over here. Making sure it's toggled there. So over the last 6 months, this has only gained us about $568. It's been taking a pretty large hit over the last couple of weeks. This right over here, you can see we've earned $272.21. So those two combined, pretty nice return thus far. And you can see we have a total of almost 63 shares for this company, totaling a cost for us $19,000. So quite a bit going into Home Depot. It's been a couple of years since we started investing in the company as well. So that's really nice to see, even though with having a more recent drop. My biggest concern with Home Depot is its debt. And I've mentioned that before as well too. Every time I look at the numbers, that debt just kind of gets me a little weary when it comes to investing. But as of right now, I'm still putting that money in. As you can see, we put about $1,600 in year to date, which is a pretty decent amount. And most of that had probably come in since this time with that drop. And then you can see over here, we also have Costco. So year to date with Costco, toggling that over there, we've earned $3,435 in gains, $34 and a penny in dividends. Actually, I believe, did the special dividend? I think the special dividend came in like right before the year-to-date numbers there. So you can see here we have about 15.61 shares of the company. Right now, the price is $870. It's pretty up there in evaluation, to be honest. So I haven't been investing in them for quite some time. You can see here our total cost is about $7,000 in, and our average price point is $452. So we had a really nice return altogether for Costco, and that's, including with this right over here. So if we go to our all-time, you can see here we're at $6,500 for Costco as a purchase. So definitely started small. So if you're somebody who doesn't have a lot to get started with, keep this in mind. I started this account back in 2019, and you can see I was just putting in a couple of bucks at a time when I could, and then as I was able to invest more, I was able to go ahead and do that. And again, M1 Finance lets you do fractional shares. So if you don't have $870 for a share, if you wanted to be buying them, with M1 Finance, you could be putting in 10 bucks and be buying in small increments as well. And plus, by the way, the link in the show notes with M1 Finance sometimes does have a promo. So if you want to use that, that does help me out as well too, so I can keep making more content like this. And I typically just reinvest all that money in the portfolio. So we also have Apple here. Let's go to our year-to-date, so we make sure those numbers are there. So you can see here, we totaled a market gain of $5,000. Honestly, this pretty much came just over the last couple of weeks over here. And then you can see our dividends earned is about $60. We have 149 shares. Total cost is about $22,600. So right now, I've actually was investing in them when they were back at $175. So I was putting in quite a bit over the last couple of months. There's times where I just slow down on my investment with companies because either the valuation got quite high, not saying that I can't buy while they're at 52-week highs or pretty expensive, while also at the same time, if I have other stocks in my portfolio that are not performing as well and have some more opportunity, I sometimes will just go that route. Now, next up here is going to be with Microsoft. Microsoft, I've also been slowing down on investing for a little bit while still knowing it's a great company and I love being invested in them. You can see here our market gain year to date has been $4,100. Dividends is 82, and we have about 55.36 shares of the company, totaling about a cost of $14,000. Obviously, with its total gains, it's worth about $24,000 right now. Now, Microsoft, the fun thing about that one was actually the very first company I actually invested in. I believe it actually was even before June, so I don't know why it says $0 right there, but Microsoft was our first company that we actually owned in this portfolio, along with a few other stocks, and was the very first dividend that paid out as an individual stock in this portfolio. So let's go to our finance section right over here. Let's click back onto the year to date. So this section right over here as a whole is actually the one that's hurting us the most right now. You can see it's down about 8,633. Pretty much all comes from one company because the other two are in the positive. So net positive overall in this portfolio, or in this section right over here, while obviously SoFi has been hurting us. While I'm invested for the long term, I'm not really worried about the midterm of how a stock is performing, so long as the fundamentals are there, the company's headed in the right direction. Because sometimes it's hard to invest in a company when it's constantly going down. While that's, difficult for some people, I actually prefer that if I still see the company long-term headed in the right direction. Now, could I be wrong? Definitely. Have I been wrong before? A little bit. While at the same time, most often than not, when I've seen a company that has really strong fundamentals and they've gone down in price, it just gives me the opportunity to buy at a nice discount. So in this overall group, I've actually earned $548 in dividends, and that's mainly from Ally and Discover. So let's go ahead and hop into these ones. So in this one right over here, you can see with Ally, we have 480 shares. Right now, we put in a total of $13,454, and it's worth about $19,255. 2,300 has been grown over the year so far, and we earned a total of $282 in dividends. Now, it shows that their yield is about 3%. When I was investing in it, it was closer to about 4%. So my yield on cost is about 4%. So I'm getting some good dividends from this company, and again, just reinvesting into the overall portfolio when that money comes in. Then from this one, we got Discover right over here. So Discover, we have 191 shares, total cost of about $17,000. And you can see here our market gain year to date is almost $2,800 with $266 in dividends. Now they are in the midst of getting purchased out from Capital One. I don't know if I really want to hold Capital One. I'm actually maybe going to do a full video on it in the future. So make sure you're subscribed if you want to check it out. And while you're at it, if you want to hit that like button, help support us out. I'm not 100% sure, which is kind of interesting because I actually use Capital One as my main personal bank account. While their books and their quarterly reports, I don't know if they're the ones that I want to be invested in as much as I wanted to be with Discover, but maybe having them and Discover merge might yield me a company that I would still want to be invested in. So I'm actually going to wait till the merger goes through to decide if I want to hold on to Capital One or if I just want to go ahead and sell afterwards once they do the full merger. Now, next up here is going to be with SoFi. So this is the, I believe, only company in my overall portfolio that is in the red in its entirety. So you can see here we have 5,902 shares, a total of $7, or an average of $7.10, with a total cost of nearly $42,000. Now, this was also over time that we were investing into the company. So if I go to my all time, you can see that we were plugging in away as time was going on. So it wasn't all at once, of course. So right now we are down about $13,500. Might be a little gut wrenching for some people to be like going down that much. They do have some swings up and down as far as the market. I was in the green for quite some time because obviously with our $7.10 average, yeah, there were times that we were nicely in the green. I could have sold if I wanted to, but I am holding on to this company for a long time. I've been a user of the company as well as on my main channel. I actually do make a lot of SoFi content, and I've been making them since like 2019. So I actually love investing in this company, and I will continue to invest in them. I see a lot of great potential for them to be in that top 10 financial institutions. And if you just go off of that with the numbers and where they can be, holding on to this with, almost 6,000 shares is going to reap me some great rewards. Obviously, if it doesn't work out, that's going to be a pretty big hit, but that's why we diversify and have investments into multiple different companies, which is always a great thing. So next up, we have our growth section right over here. Let's go to our year to date. So right here, you can see we have Meta. Meta's the best performing stock I have. So we have 67.22 shares. I did sell some shares on the way up. So just kind of something to keep in mind for some people that if you're selling on the way up, it's not always necessarily the worst thing if you feel like it might get a little overvaluated. I know some people run into that with like Nvidia right now where the price can be a little bit high and they don't know if they can sustain that kind of growth. So that has happened before where, yeah, I've sold a little bit of it. If I held on, I would have been worth obviously more. My average price is about $180. I was buying quite a bit when it hit under $100 a couple years ago. So my total cost is $12,000, and you can see here just this year alone has gained $9,500. So my current value right now is $33,579. They did start paying out a dividend, so this was actually one of the newest dividend payers in my portfolio. I believe this has been the second payout, or the second payout's about to happen. So we have $64.95 currently paid out. The price right now is $500 per share. The PE ratio, I believe it's actually a little bit lower than that. Let me check real quick. So the PE ratio is about 25 right now. So it's depending on, your investment and what you're looking for, it might be just about right to be still buying even at this price point. I did buy it recently when it was kind of dropping down to like $4.75, just a tiny bit. It's really hard to buy when my average price is quite a bit lower than the current price of the stock. So next up here, we got Amazon. Let's make sure we're going to the year to date here. So Amazon, we have 218 shares, about $128 per share, put down about 28,000 over time. And with the current price point, we are sitting at almost $40,000, and 6,500 of that has come since the beginning of this year. I've slowed down a little bit on purchasing Amazon. Still a great company, still somebody I want to be investing in. But again, with some of the other companies I have in the portfolio, that money might be used in those sections a little bit more than I would with Amazon, but still love them. And I still think this, even at this price point, based off of where they're going to be going, to be putting money into them. Next up here, it's going to be with Google. So Google is actually the company that just recently started paying out dividends. So you can see here with our year to date, we've earned $66.67 in dividends. And that was actually just paid out into the portfolio, and actually have it investing into SoFi right now. It's just pending. So you can see that was that first dividend. So it's really great. We have a total of 334 shares of Google. I have been buying this company nonstop. One of my favorite companies to be investing in. And so you can see here, we got about almost $42,000 in total, and it's worth about $59,000. And so year to date, we've earned about $11,600 in market gains, which has been really, really great. It's been kind of fluctuating around the 175 for a couple of weeks now, but we're still investing into this company for the long term, and really, really happy that they are now starting to pay out a dividend. Now, if by chance you are also a Google shareholder, let me know in the comments down below what was your total amount for your very first dividend with the company. Now, I got more videos right over here on screen for you to keep on learning and watching when it comes to my investing journey.